CNBC TV18, celebrating 15 years of leadership.
Hello and welcome to Markets Today. I'm Lata Venkatesh, and joining me from the Delhi News Centre is Surabhi Upadhyay. We had a fairly decent day of trading today. It is the 6th consecutive day when the Indian indices, equity indices, have ended higher. And at these stratospheric all-time highs, the markets are simply churning, not finding a trigger to go even higher, but certainly not finding enough sellers to take the market lower. All-time highs yet again. Hi, Surabhi.
Hi, Lata. Absolutely. Yet another good day for the bulls. Let's run through the top headlines. Indian shares continue their rally as foreign buying is seen robust ahead of an announcement of quantitative easing by the ECB. The Nifty puts on 0.4%. The Sensex scales 29,000 and closes just above that mark.
Pharmaceutical and capital goods stocks were the ones that led the buying. Tata Motors gains almost 3% as the company launches a new compact car called the Bolt.
Suzlon moves to cut debt by almost 5,000 crore rupees as it sells its German arm Senvion for 1 billion euros. However, the stock ends down 7% on concerns over the revenues and profits that the company will lose without Senvion in its fold.
And mid-caps have a mixed day with the index up just 0.2%. India Cement surges 8% as the Supreme Court gives a clean chit to Vice Chairman and Managing Director N. Srinivasan in the IPL case. Dish TV and Mastic gain on good numbers. All right, those are some of the headlines, and here are the experts that we have lined up on the show today. From the sidelines of the World Economic Forum in Davos, we'll get you a mood check from the Finance Minister Arun Jaitley and Chief Economic Advisor Arvind Subramanian. In addition, we will also get you some global perspective on the Indian markets from Daryl Guppy of guppytrade.com.
All right, so that's all the opinion that's coming your way. But first up, let's tell you what really happened during the day. So on to the day's trading action then. The bulls are in cruise control mode on Dalal Street as markets gain for the 6th consecutive day and records are broken for the 3rd consecutive session. Anuj Singhal is here with the day's trading highlights. Anuj?
Well, you know, the numbers really have lost their relevance a bit because the markets are in uncharted territory, and whatever you hit would be a new all-time high. So whether it's 29,000, 30,000, right now, the bottom line is that bulls are in total control of this market. The way the market closed today at the high point of the day with the late surge ahead of the ECB meet was telling you that the bulls believe that there's absolutely no risk in keeping positions overnight and just going all in on the market. Blue chips continue to outperform the mid caps. That really has been the story of last 3 or 4 days. Let's talk about some stocks. As a sector, pharma did quite well today. Sun Pharma, in fact, was the top Nifty gainer today, up 4%. Cipla and Lupin as well were higher in trade. Apart from that, in terms of heavyweights, the support for the market came from stocks like Axis Bank, Tata Motors, Infosys, all up anywhere between 1 to 3%. Then some other stocks that looked good in trade today included DLF, IDFC, ONGC. So across various sectors, we saw individual stocks gaining ground. In terms of stocks that capped the Nifty's gains, Reliance Industries was right on top actually. That stock was down about 2.5%. NTPC and PNB were other notable losers. In terms of mid-cap action, there were some gainers in trade today. Stocks like, first let's talk about the losers actually, Alembic, Suzlon and PTC India Financial. They were all down. Suzlon, in fact, it's a classical buy on rumor and sell on news playing out on that one today. And in terms of mid-cap gainers today, we had stocks like Spark, the Sun Pharma Advanced Research Company. That's gained some 40% this week. GSFC was up 13% and DB Realty was up about 10%. So for now, bulls in total control, and let's see for how long can they keep control of the market. As of now, as I said earlier as well, levels have become a bit meaningless, and it's just about how far the market can go from here on.
All right, thanks a lot for that, Anuj. A bit random today's moves actually. What we actually saw was private sector banks continued. There was a bit of that flight to quality. As Anuj pointed out, pharma stocks were very much in the winners list. And there was some bit of selling of beta. So PSU banks got sold off a bit. Power stocks sold off a bit, including the mighty NTPC. So it was a bit random at such stratospheric levels, as I told you. There was more of churning of stocks, not necessarily very stock-specific action.
All right, then let's get some market perspective going. Daryl Guppy of Guppy Traders expects the Indian markets to break out on the upside. He has a near-term target of 9,300 on the Nifty.
The Sensex and the Nifty at the moment is a consolidation developing, with the Sensex between about 27,000 and 28,500. So we can take the width of that consolidation and project it upwards, which gives us an upside target around 30,500. So what we're looking for is a breakout on the upside. Now, this long-term Guppy multiple moving averages show us that this is a strong, established trend. When the market dips back, buyers are coming in, investors are confident for the future. So we're looking for more upside both on the Nifty and on the Sensex. So we're looking at the Nifty, for instance, we got an upside target sitting at around 9,300 at this stage. Not so much. So as I said, we've got a little bit Nifty, we've got a very strong support level sitting at 8,000. We haven't even really tested that to any significant extent. We've got this rally retreat behaviour between 9,000 and 8,600. A break above that 8,600 gives us that 9,300 target. The strength of the Guppy multiple moving average suggests there is a very, very low probability of a downtrend break. And in fact, there's no end of uptrend patterns that are appearing in the market.
Well, that's one technical view. Now for all the action from the FNO space, let's go across to Nigel D'Souza.
Well, in the derivatives market, it's the same story. Call buyers are making money while put writers as well are making money. So the big shot up in today's trade, that's because now there's aggressive out-of-the-money call buying. And because of that, the IVs are moving higher. That's why the VIX moved up today. Take a look at the 8,700 call. Traders who had bought that particular strike, they're unwinding their position now. And in fact, they're going ahead and taking a bit of a punt. They're buying their 9,000 call, like in today's trading session. The premium moved from around $8 to around 14 rupees. The 8,850 call as well. The premium over there spiked up by close to around 50%, while the 8,900 call as well, the premium over there spiked up by close to around 68% by the time we wound up. The put writing continues, so the base of the Nifty has been moving higher. That's really continuing in today's trading session as well. So the 8,700 level, that's going to be very, very crucial, because the 8,700 put, that was getting aggressively written in today's session. The premium fell from around 63 bucks all the way to around 48 rupees. The 8,800 put as well, we saw the premium crash from around 110 bucks all the way to around 90 rupees. The 8,750 put, on that one as well, if you wrote that particular strike, you would be making money, because the premium fell from around 83 rupees to around 65 rupees. So yet again, that 8,700, around that 8,650 level, that becomes extremely crucial for the Nifty in the near term. Individual stocks at one focus. IDFC returned to the buying list. That one saw big buying today. The stock entered higher by close to around 4%. Dish TV as well posted its numbers. That stock saw big buying. And India Cements, on the back of some relief that they got today, that one in fact was higher in today's session. Big buying being seen particularly in the last start of trade. Sun TV has had a big run in the last few trading sessions. That one saw unwinding pressure in today's trade itself, while Petronet LNG and Allahabad Bank from the broader markets did see shorting pressure.
All right, Nigel, thanks so much for that. Let's move on then to the big deal story coming in. In a bid to pare down its debt, wind turbine maker Suzlon has finally sold its crown jewel, Senvion. US-based private equity firm Centerbridge Partners will shell out 1 billion euros, about 7,200 crore rupees, to buy out Suzlon's German subsidiary. The all-cash deal is expected to be completed by the end of this fiscal, subject to regulatory approvals.
Current our interest is 1,600 crore is there on the full year basis. It will reduce by the half. With the 800 crores reduction with the interest, it's a two-way. Out of 7,200 crores, we are paying 6,000 crore rupees to the Indian bank lender in a rupee payment, and 1,200 goes for the operations for the growth. But same time, 3,000 crore is the FCCB bondholder is there. They have an opportunity to convert it to equity. So this way, 16,500 crores debt will come down to 7,500 crores, and my interest cost will go down to 50%. 1,600 to 800. It's a 50% is a Senvion and 50% is Suzlon. Consolidated revenue in the current financial, if you take, it's a 50-50. But next financial year, again it will ramp up, because my volume is so low in the Suzlon. Now it will increase, and it will go higher. Next financial year, we are 100% in the profit because there is a reduction of 50% our interest cost. And same time, our volume is increasing because availability of the liquidity, which will make us to more profitable company in the industries. So we'll be in the profit in next financial year.
That will be a very big relief for Suzlon if they are able to pull it off. But Pragya Bharadwaj is here to tell us what's the detailed opinion on Suzlon's sale of Senvion. Pragya.
Well, I would definitely say that it's a shot in the arm, at least in the interim, wherein the company gets some breathing space and address the liquidity crunch that they're facing at this point of time. But one of the concerns is that overall, one of your best subsidiaries has been sold at less than one-time sales. Management believes that the strengthening of the balance sheet was one of their top priorities, and they had to address the liquidity crunch, and this was an important strategic sale which they had to undergo. Now, what we understand is that out of this corpus of 7,200 crores, Suzlon will be able to deleverage its balance sheet to the tune of 6,000 crores. So out of a total debt of 16,500 crores, that will be the amount of deleveraging. The company wants to repay its domestic lenders and will replace high-cost rupee debt with low-cost foreign debt. In fact, they've made promises of turning Suzlon profitable by FY16 end. What we understand is that the blended interest rate for Suzlon will come down from 10% to 7%, which would translate into annual interest savings of close to about 500 crores. However, management has a much more bullish outlook on this. They believe they will be able to cut down their interest cost by 50% from 1,600 crores down to about 800 odd crores. The other thing, which the management pointed out is that Senvion used to contribute roughly about 50% to Suzlon's overall consolidated revenue, and to that extent, the revenues of the company will shrink once the deal gets finalized. We've done some number crunching, and this is based on the FY14 consolidated numbers that we have. Senvion's revenue stood at about 13,000 crores and profits stood at 1,050 crores. The company also enjoyed an order book of 10,000 megawatt. So to that extent, the revenue and the losses of Suzlon will have to take a hit. Ex of Senvion, Suzlon's financials will look like revenues of about 7,000 to 8,000 crores, but the losses actually will exaggerate from 3,000 crores, which they reported in FY14, to over 3,500 crores, and this is because the company's more profitable business is actually going away. And that is probably why you saw that stock reaction today down by anywhere between 4 to 6 odd percent, and the street will now want to watch out for if management makes do on its promise of turning the company profitable by FY16. Back to you.
All right. Thanks a lot for that, Pragya. So as you can see, there is a bit of a discrepancy between what some brokerages are analyzing and what the Suzlon management is saying. Perhaps much will depend on how much business Suzlon is able to generate from its local order book, from its India order book. Well, we also spoke to some of Suzlon's key bankers, and here's what they had to say.
Senvion deal was being talked about for quite a while to a PNP investor. And then now the company has come out with a statement. Now the CDR lenders have to sit down and approve this deal. We will definitely be one of the beneficiaries of this deal. And to the extent of 5,000 crores coming down, then we will have a substantial portion of our liabilities also adjusted.
They will repay loans to the extent of 5,000 crores. That is one thing. Out of this money, they are proposing to repay term loan installments which are due till March 15. That means another 3 months installment. Our exposure, of course, I can't divulge the figures as such. We have substantial exposure. It should come down by around 45 to 50%.
Well, let's straight away head to Davos, where the World Economic Forum is currently underway. The World Economic Forum is underway in Davos, and Finance Minister Arun Jaitley had an interaction with CNBC's Andrew Ross Sorkin today. When asked what to expect from the budget, the Finance Minister said that India is not in a position to withdraw taxes, as it must set its order books in order. Or its books in order, beg your pardon. A clear hint that the budget will probably not have any major tax stops. The FM also spoke about rationalizing subsidies, especially on LPG and kerosene.
Petrol is now linked to the market, which was subsidized. Diesel has been linked to the market. As far as LPG is concerned, the first subsidy reform has started this month. From the 1st of January, all subsidies with regard to cooking gas now go directly into the bank accounts. So almost 150 million families in India will get them. The next stage, we have to carve out the families who are not entitled to it. So the next area we intend tackling is kerosene.
And staying on with our Davos coverage, Chief Economic Advisor Arvind Subramanian says that India stands out as a beacon of dynamism and hope in an environment where there are growing global concerns. Confident that India would be able to benefit from the positive sentiment about it among foreign investors, Subramanian said that the real investment flows should begin picking up from next fiscal, but it would be a gradual process. Listen in.
Compare the Indian economy today to July and August of 2013. Inflation is half what it used to be. The current account deficit even less than half what it used to be. Growth has, my own sense is that the growth deceleration has bottomed out, and there are positive impulses to growth going forward. First from the fact that oil prices is going to put more purchasing power in consumers and in the pockets of firms as well, and the fact that inflation is coming down also opens up scope for more support from the monetary policy side as well.
Right. Moving on, the European Central Bank is poised to announce a plan on Thursday to buy government bonds, that is European country government bonds, resorting to its last big policy tool for breathing life into the flagging Eurozone economy. A Eurozone source said on Wednesday that the ECB's executive board, which met on Tuesday, has proposed that the bank should buy 50 billion euros or $58 billion, that is, in bonds per month from March. But there is still uncertainty on whether these purchases will happen for 1 year or all the way up until December 2016. Also, markets are watching if the losses on the bond portfolios will be borne by the respective central banks or it will be shared across countries. Here's a take filed by CNBC's Annette Weisbach.
Well, the options are, of course, not a lot of debt mutualization. I think that will be very, very closely watched from market participants, whether we'll really see a sharing of potential losses from that QE program. That probably will be the focus during the press conference if we really get that QE program, which currently is said to be around €1 trillion, which, of course, will boost the balance sheet into the direction of the previous announced goals by Mario Draghi, literally being around €3 trillion. Of course, looking at the details, including if we include the ABS and covered bond program, that actually should boost the balance sheet even by more. One of the most interesting questions, of course, will be how he actually wants to boost inflation by that program, but the effectiveness of that QE program, as looking at current market rates, they're still far below the 2-year inflation at 2% inflation target, but there was a slight uptick yesterday, so there might be some hope that at least the announcement of the QE program has some success in it already. With that, back to you.
All right, on that note, we slip into a short break, but some technical perspective with Sudarshan Sukhani coming up on the other side.
CNBC TV 18, celebrating 15 years of leadership.